All right. Well, hello, everybody. Welcome to the Social Security presentation today on how to get the most out of your Social Security benefits. We want to discuss in detail all of the options available to you. If you do have any questions, uh, very simply, you can email us at info@deckmanwealth.com and we'll be able to answer any questions you might have at the end of our presentation. The presentation itself is approximately 40 minutes. We're going to cover a lot of information in a very short period of time. And if you do have questions as a follow-up, please reach out to us. We encourage you to do so. You can see the important disclosure information along with our three advisors, myself, Sam, and Adam, and any one of us, all three of us, are qualified and experts in this area. So if you do have a question and want to reach out, please feel free to do so. Real quickly, we're going to talk about the agenda for today. We will be sending a recording and a follow-up to you within a week or so, and this will have all the slides and the recording of today's presentation. We're going to go over the basics of Social Security, Social Security 101. When should you apply? Will Social Security be there for you? And very important, strategies to help you maximize your benefits. And then lastly, is Social Security enough to live on? On that note, I'm going to turn it over to Sam and I'll be back at the end to wrap it up.
All right. Thank you, Jordan, for that introduction. And we're going to jump right into Social Security 101. I do want to make a comment that today's conversation, today's presentation is going to cover a wide range of topics. It is not going to be covering every single thing fully exhaustive that Social Security has in store. The program has many different facets to it. And so today is really just a good primer about what Social Security is, strategies, and ways that we could help maximize. If you want to dive deeper into your personal situation, we're going to invite you at the end to come in to get the analysis, but want to just set the table properly that we're going to touch on most things, but not everything today. First couple points that we want to make before we get too far into this is that you have many claiming options. It is not as simple as doors A, B, or C when determining when you want to file. And the decisions that you make, as well as a spouse, are going to have far reaching consequences, not only while both of you are alive, but when one of you passes away. It's going to have a significant impact again on both of you while you're alive and then the surviving spouse. The fourth point here is that the system is not bankrupt. We're going to discuss here in a little bit that we're not on a sustainable path. However, we're going to be going over what will come from that point. And lastly, and possibly more importantly, your friends and coworkers are not experts. Jordan and Adam and I cannot tell you how often we are in a meeting where we hear something to the tune of, my friend told me this, my family member told me that. And what they were quote unquote told was not the right answer. And had they not reached out and shared with us that information, they might have been led down a bad path. Social Security is incredibly complex and also it's changing all the time. We're going to be going over at the end of the presentation a recent change that was just made. And so you have to make sure that you're up to date on Social Security, and it's way too important to leave to someone that is not, doing this on an everyday basis. So who is eligible for Social Security? Well, there's three main types. There's the retired worker, the spousal benefit, as well as the survivor benefit. So in regards to the retired worker benefits, if you are working for a job and paying into Social Security, you are entitled to be able to collect at 62 or later should you choose to wait. The spousal benefit means that even if you did not work in a job that was paying into Social Security, if you were married to someone that was paying into Social Security, you are still entitled to a benefit. And then lastly, in regards to the survivor benefit, if your spouse before they had passed away was covered by Social Security, you also will be able to continue receiving benefits. Now, there's a couple other folks that can receive Social Security, those being minor children and the disabled. We are not going to get into that during today's conversation. So if that applies to you directly, please talk to us, schedule a meeting so we can go over your particular situation. The main focus is going to be on these three types: the retired worker, spousal, as well as survivor benefits. So how is the benefit calculated? Well, what Social Security does is, in order to be fully eligible, you need 40 quarters of work, which amounts to roughly about 10 years. And the way that it's calculated is they look at the highest 35 earnings years of your career. And so the longer that you can work to at least make sure you get 35, the greater your benefit is ultimately going to be. Now, with most folks, they happen to be at the higher earning potential of their careers towards the end. So for every year that you have a great earnings year and we could substitute a lower year, that's also very positive. But just want you to understand that they're looking at the top 35 years. So if we can substitute some of those zeros with at least some level of earning, that is going to ultimately help your benefit down the line. Since 1984, your Social Security benefits are taxable. And yes, that is correct. When you are working, you are taxed to pay into the Social Security system. And then when it comes your turn to file for benefits, it is also taxed. Now, in terms of what percentage of your Social Security benefit is taxable, they look at what's called provisional income. So provisional income is your adjusted gross income, which is AGI is the acronym, plus 1/2 of the Social Security benefit, plus any tax exempt interest. So this would be interest from like a municipal bond, for example. Now, for a couple that's married filing jointly, if your provisional income was over $44,000, then up to 85% of your Social Security is going to be taxable. Now, it is not taxed at 85%. It's 85% of what you receive from Social Security is going to be taxable. And what it's taxed at is your ordinary income tax rate. So it looks at other income that you're receiving. Are you taking distributions from IRAs? Do you have any interest that's being paid in a non-qualified account? Do you have any other pensions that are being paid? But it is how it's ultimately calculated. Now, fortunately, in the state of Colorado, a couple of years ago, we passed a law that if you are receiving Social Security and you're over the age of 65, there's no state income tax. And so that's a great benefit, at least for our clients that are here in Colorado. So when should you apply for Social Security? There's three main ages that we want to go over with you. The first one is age 62. Now, that is the first age you are eligible to receive benefits, but if you do that, your benefit is going to be reduced anywhere from 25 to 30%, depending on when your full retirement age is. Now, your full retirement age is somewhere between 66 and 67, depending on the year that you were born. And the way Social Security thinks about the benefit is your full retirement age, they say, is equal to 100%. And so if you file earlier, which is 62, if you get the 25% reduction, then it would be 75%. Or if it's a 30% reduction at age 62, then it would be 70%. Now, they do incentivize you to try and wait to file for your benefit. And the way they incentivize you is they say for every year that you wait beyond your full retirement age, you get a guaranteed 8% increase in the benefit, which goes all the way up until age 70. Age 70 is the maximum age that you should wait to file for benefits. So even if you are still working, whether it be full-time or part-time, when you get to age 70, you should file for Social Security because it is to your benefit and there is no reason to wait anything beyond that. So here's a chart where we can look at what your full retirement age is. So anyone born before 1954 at this point is 66. And those born between 1955 and 1959, it's 66 in a couple months. And for everyone born 1960 and later, your full retirement age is 67. And again, your full retirement age is 100% in terms of the way Social Security thinks about it. So here's a chart which goes over how much is your benefit going to be reduced if you're filing early. So we'll start here with this middle column. If your full retirement age is 66 and you were to file at, let's say, age 64, then you would only receive 86.7% of what would have been your full retirement age benefit. And if we look at the full retirement age for age 67, we could see that if you were to file at age 64, same example, then you would only receive 80% of what you would have received at age 67. So it's a 20% reduction in that example. Now, a question which we get often from clients is, do I need to wait until I turn a specific age in order to file for benefits? Well, your Social Security accrues on a monthly basis. So even if you can't make it an entire year before you file, just waiting that extra month or two or three is still going to have an impact and still it increase your benefits. So if we look at the other side of the token here and see how much more could you gain by waiting to file for Social Security, we'll start here with the middle column. So if your full retirement age is 66 and you wait all the way until age 70, then you would get a 32% increase in the benefit, 8% each year for 4 years. Now, if your full retirement age is 67 and we were to wait till age 70, you would see a 24% increase in your benefit, the 8% increase every single year. Now, one thing that is not included in this graph is that once you are over age 62, even if you have not filed for benefits, your Social Security is still being credited with what's called the COLA. The COLA stands for Cost of Living Adjustment. So while in this example of the full retirement age is age 67, it says the benefit goes up 124%, it may actually be more than that if you do receive some of the cost of living adjustments. And I should explain that the cost of living adjustments are supposed to be tied to inflation. Kind of, not really. Now, they're not guaranteed every single year. However, the past couple of years, they've been a little bit higher than what we've experienced normally. But in the Social Security Trustees Report, they are assuming an annual COLA of around 2.5%. So let's take a look at what the benefit difference will be at age 85 if we had waited to claim our benefit at age 70 versus claimed it at age 62. So let's say your full retirement benefit, or your full retirement age benefit, which was 67, would have been $3,000 a month. So had we filed at age 62, by the time you go to age 85, your monthly benefit would be a little over $3,300 a month. But if we waited to file at age 70, by the time we get to 85, the monthly benefit is over $5,800. So by waiting, by the time you get to age 85, your monthly benefit is about $2,500 more per month, or roughly $30,000 per year. And this can be incredibly significant, particularly for those that are going to have longer lives. The average life expectancy for a female in the United States is somewhere around 87, 88. And so this graph is incredibly telling, particularly for our female clients that need to be very conscious on potentially having very long lives. So delaying could, mean the difference of quite a lot of money in the long run. So now we're going to switch gears and talk about 3 different types of benefits: the spousal, the divorced spousal, and the survivor. Now, the way the spousal benefits work is you get the greater of these 2 options. One is you get half of the primary worker's full retirement amount, so half of your spouse's full retirement amount, or the benefit based on your own working record. So let's go through an example. Let's say John's full retirement amount is $2,000 a month, and Jane's full retirement benefit is only $800 a month. What will Jane end up receiving? Well, if Jane applies for her Social Security at her full retirement age, she will get $1,000. And the reason why is because half of John's, which is 1,000, is greater than Jane's own benefit based on her own working record, which is 800. So when you go to apply for Social Security, you will let them know that you are married and you will need to provide proof, and they will automatically give you the greater of the two. But this is an example which uh, shows you what that might look like so we can better forecast what the retirement income is going to look like. So here's some additional rules for spousal benefits. One is that the primary worker must have filed for benefits. So if we go back to this particular example, Jane would not be able to receive the $1,000, which would be half of John's, until John files for his own. So let's say John is waiting to file for his own benefit for a couple of years. Jane would still be able to collect 800, which is what she earned on her own working record. But in order to get the spousal benefit, the spouse must have filed for their benefit. The second point here is that you must be at least age 62 for a reduced benefit or the full retirement age for the full benefit. So again, the full retirement age is half of the spouse. So if you try and file for a spousal benefit at age 62, instead of receiving 50%, you receive some lesser percent from there. So it would be somewhere in the neighborhood of 42, 43, depending on what your full retirement age is if you were to file at 62. And the last point here is very important, which is no delayed credits on the spousal benefit after the full retirement age. And so the spouse gets half of what the worker would have received at their full retirement age. So if the worker continues to wait until age 70, well, the spouse still gets half of what that worker would have gotten at their full retirement age. So now let's spend some time talking about divorced spouse benefits. You are entitled to a divorced spouse benefit if your marriage lasted 10 years or more. So technically 10 years and 1 day. And the person receiving the divorce spouse benefits is currently unmarried. So if you were married to your longtime spouse and get divorced, you would be able to file on their benefit. However, if you are married to your longtime spouse, divorce, and then remarry, then you can no longer collect benefits on your first spouse. Now, in order to collect the divorced spouse benefits, the ex-spouse must be at least age 62. And the ex-spouse doesn't need to have filed for their benefits for you to be able to collect, which is different than the spousal. So when it comes to the spousal benefits, if you want to receive that, your spouse must have filed, but they cut you a break here with the divorce spouse benefits. So you're not trying to coordinate with your ex in terms of when they're ultimately going to file. So as long as they're over age 62, and of course, at least you are over 62 as well, you are able to receive divorce spouse benefits based on their working record. So here are some additional rules. More than one ex-spouse can receive benefits on the same worker's record, and it does not have any impact on either the worker, their current spouse, or any ex-spouses. So let's give an extreme example. Let's say that someone is married to 3 different people for a period of 10 years and 1 day, and then they get remarried for a 4th time. The 3 ex-spouses are all able to receive divorce spousal benefits, and it has no impact on the worker or their current spouse. And the key kicker here is that if you remarry, you can't collect on your ex's Social Security. And so there is no change to your benefit if your ex remarries. Now, here's where things can get a little tricky when it comes to survivor benefits. And I want to begin this part by saying, if you are in this circumstance, please contact our office. We will help walk you through all the benefits when it comes to at that time. But you ultimately have a couple different options here. And your benefit is going to depend on 2 different criteria. One is the age at which the deceased spouse originally claimed their benefit. And the second part is the age at which the widower claims the survivor benefit. And so going back to point 1 here, the longer the deceased spouse waited to file for their benefit, the larger it's ultimately going to be for the survivor. And that same thought is going to apply in terms of when the widower claims a survivor benefit. The longer they wait to claim, the larger the benefit is going to be. And so if the widower claims before their full retirement age, the survivor benefit will be smaller than the original benefit. If the widower claims after their full retirement age or later, their survivor benefit will be equal to 100% of the original benefit, which means what the deceased spouse was receiving. Now, it's very important to understand that while both spouses are alive, they both receive a benefit. When one spouse passes away, one of the benefits goes away. So it's incredibly important for us to be aware of the consequences while we're both alive in terms of what that's going to mean when someone passes. So here are some additional rules. The couple must have been married for at least 9 months at the date of death, except in case of accident. And the survivor must be at least 60 for a reduced benefit or full retirement age for full benefit. And yes, 60 is correct. And you may notice that it is lower than what you could claim on a retired worker, spousal, or divorce. So if you are a survivor, you do have the ability to begin collecting a little bit earlier at age 60. And on the next slide, we're going to go over this. And so the survivor benefit is not available if the widower remarries before age 60, unless that marriage were to end. And the divorced spouse survivor benefit is available if the marriage lasted at least 10 years. So here are some strategies. When you are eligible for both a retirement benefit based on your own working record and a survivor benefit based on your deceased spouse, you can start with one and then you can switch to the other. So as a rule of thumb, we always want to take the higher benefit last. So if the survivor benefit is higher, meaning if your deceased spouse had a higher Social Security, we want to start your retirement benefit at 62 and then switch to the survivor benefit at your full retirement age. If the situation's reversed, if your retirement benefit is higher, we want to start the survivor benefit at 60 and then switch over to the retirement benefit at 70. And again, we will walk you through this if this situation should come about, but it's important to understand that when it comes to widows and widowers, you can start one benefit and you can switch to the other later. There was a very significant change that occurred earlier this year. And what it was it eliminated the windfall elimination provision and government pension offset. If your Social Security benefit was reduced or eliminated because of a non-covered pension, you will see your Social Security benefit increase. So who does this most often impact? Well, that would be teachers, firefighters, police officers, or federal employees covered under the Civil Service Retirement System, or CSRS is sometimes how it is referred to. And the changes are retroactive back to January 1st, 2024. So if your benefit was impacted, you will receive a lump sum payment. And we are told by most clients they've already received it at this point. So if you believe that you are entitled to a benefit and you have not yet received it, it may be good to reach out to Social Security to see if you're still entitled to more money. Now, this applies to both spousal as well as survivor benefits. But if you never applied for Social Security because you thought that you would not receive a benefit, we recommend that you apply as soon as possible. And the reason being is you may still be entitled to at least 6 months of benefits retroactively. So as we mentioned, the retroactive benefits will be paid in a lump sum, which you should have already received. And then adjusted forward, you should receive the higher monthly payments beginning this month. And if this has not been reflected properly at this point, then please contact Social Security so they can correct the matter. So will Social Security be there for me? This is a question which we receive very often. And we want to first look at how the trust fund is doing. OASDI is the formal name for this program, Old Age Survivor Disability Insurance. And every single year, the trustees come up with their report. So if we look at the trust balance at the end of 2023, we see that it was $2.788 trillion. And at the end of 2024, 1 year later, it was $2.721 trillion. So yes, it is a lower amount to the tune of about 67 billion. And we've been seeing this trend happen for the past couple of years in terms of costs exceeding revenues that the program is ultimately making. So if there are no changes whatsoever, they're projecting that benefits can be paid as is through the end of 2034. If there are no changes beginning in 2035, everyone who is currently receiving benefits and all future scheduled benefits will be reduced to 83%. Now, if there are no changes going all the way up to 2098, then benefits would be cut even further down to 73%. So, in summary, we have until 2034, but if no changes are made, then every single person that is currently receiving benefits will receive a 17% haircut. Now, here are some strategies on ways that the Social Security program could become solvent. This is not an exhaustive list. To our knowledge, there is not much traction happening right now in Washington on making any changes whatsoever, but these are some ideas that have been proposed. One is to increase the maximum earnings that are subject to Social Security tax. So up to $176,100 of wages are taxable to Social Security. When someone makes beyond that amount, they are no longer taxed by the program. So one possible change is to increase that income cap to a higher number to generate more revenue for the program. The second option to consider is to raise the full retirement age. This started out a long time ago at age 65 and has slowly moved all the way up to 67, but has not really been adjusted to properly account for increased life expectancies. So you might see this increase by a couple years, perhaps. The third benefit, or excuse me, the third change is they could lower benefits for future retirees. A fourth option is a reduced cost of living adjustments. Now, we talked about this earlier that the COLAs are not guaranteed. And the Social Security trustees, in terms of their report, are factoring in annual COLAs of somewhere around 2.5%. So there's a chance that maybe they just don't offer COLAs anymore. And then the fifth option is to potentially reduce delayed retirement credits. So what does this mean? This means for every year that you wait beyond your full retirement age, you get a guaranteed 8% increase in benefit. So they might say, let's move that to 6 or 5 or 4. Or maybe they say, hey, you know what? You can do this for a period of 2 years, but we don't want you to be able to go to 3 or 4, depending on what your full retirement age is. Any mixing and matching of these 5 options is possible and more. Again, this is not an exhaustive list. So for all of our clients out there that are currently receiving Social Security and are baby boomers, the bottom line is your benefits are not likely to be reduced by Social Security reform. There are roughly 70 million Americans right now that are receiving Social Security, and the vast majority of them vote. And we are of the opinion that they are most likely not going to vote for anyone that is going to reduce their benefit. So in all likelihood, when it comes to those reforms that we talked about on previous slides, it is probably going to be younger Americans that ultimately end up footing this bill. We will be very keenly watching what happens in Washington to see if there's going to be any progress that's made here. But the bottom line is we are very confident that baby boomers are not going to see a reduction in their benefit. So here's some strategies on how we can help maximize your benefits. These are factors that we consider when we're determining when the proper time to file is. One is health status. If you've received a terminal diagnosis, that's something that we want to be aware of. If you feel that your health is failing, that's something we want to be aware of. On the flip side, if you feel incredibly healthy and there's longevity in your family, those are very important factors to keep in mind. Income needs is also something that we want to be very aware of. Do we have a big enough portfolio where it can generate an income stream for us for a period of time, or maybe we want to delay Social Security by 1, 2, or 3 years? Do we have a pension separately? Do we have rental properties or any other sort of income streams? Are you planning to work either full-time and maybe a less stressful job than your main career, or are you planning to work part-time in some capacity? And then lastly, we want to be very focused on the survivor's needs. As we talked about earlier, and it's important enough to say again, while both spouses are alive, they are both entitled to a benefit. But when one of them passes away, one of the benefits goes away. So no matter what, any way you dice it up, when someone dies, they will be receiving less income because one of the Social Security benefits is going to go away. So we want to make sure that the survivor is going to be protected from an income standpoint throughout their entire life. So here's some ways that we can increase the benefit. One is to improve your earnings record. As we talked about earlier, the way the calculation works is they look at the highest 35 years. So if you have not worked 35 years, trying to at least get some of those zeros off of your formula and adding some higher numbers would be incredibly helpful. The second one is applying for Social Security at the optimal time. I'm going to show you here in a couple pages a Social Security analysis of a hypothetical client where we can see that the least optimal to the most optimal time results in a couple $100,000 difference. So making sure that we're applying at the right time is extremely significant when you factor in the total retirement time frame. The third one here is the retirement earnings test. So when you are below your full retirement age and receiving Social Security, the government says, okay, you can receive that benefit, but you need to be retired. And so if you are working in a job and you make above $23,000, then they're going to pull back some of your Social Security. So it's very important to be mindful of this. Now, once you are over your full retirement age, which for most folks at this point is going to be 67, you can make as much as you want from part-time work, full-time job, and there's going to be no reduction in the benefit. But again, if you are below your full retirement age and working, then your Social Security benefit might be impacted. And then the last item here is about reducing taxes. So that way you could collect more of your Social Security and pay less in Medicare premiums by avoiding the income-related monthly adjustment amount, which is often referred to as IRMAA. So when you are on Medicare, you pay a premium every single month for Medicare Part B and Part D. Now, the amount that you pay in premium for Medicare Part B and Part D is dependent on the income you reported to the IRS 2 years ago. They do a 2-year look back. And so the lower we can make your income on your tax return, the less you're going to be charged for the Medicare Part B and Medicare Part D premium. Now, a question we get asked all the time, or really a comment that is shared, is, oh, geez, I'm about to retire and my IRMAA is going to be high for the first couple of years because I made a lot more while I was working than when I was retired. Well, we actually have a solution for you. And there is a form that you could file with Social Security / Medicare called the SSA 44. And what this form is it applies for an exception to lower your IRMAA charge. And the exception is you've retired and your income is lower. And in almost all circumstances, Social Security will honor that and make the adjustment. This is such an important decision, and we want to make sure that we do it right. So please come into the office. We want to be able to run the Social Security analysis for you. Here's an example of what some of the pages look like. And of course, all of our clients, this is 100% free. It's included in everything that we do for you. Here is a hypothetical example that we ran using the software. Now, this runs through all of the different calculations, but the software generally generates anywhere from 1 to 4 different options. And we can see here in scenario 1, the lifetime nominal benefit is about 1.6 million. And then we could look at option 4, which looks at the maximum nominal benefit. We could see it's 2.2. So again, the difference between the least optimal and the most optimal based on the scenario estimates roughly $600,000 in benefits over both Bob and Betty's entire retirement picture. Now, again, this is hypothetical, but when we run this for clients, we do find that the difference between the least and the most does equal a very significant amount. So is Social Security going to be enough for you to live on? Well, for most people, probably not. It is going to be an incredibly important part of the income equation, but it's probably not going to be all of the income equation. But it's still very important to get this decision right, not only while you are both living as a couple, but particularly when one of you passes away to make sure that the survivor is best protected that they can be. And we're going to want to consider it in the context of pensions, other investment accounts, required minimum distributions, or work. Again, are you going to work part-time? Are you going to do some consulting? Or is there any other income that we need to be aware of? So if you have any of these questions, when should I apply for Social Security? What if I want to keep working? How much will my benefit be? How can I coordinate spousal benefits? What's the best long-term strategy for my situation? Or what do I do next? We can help. Please come into the office. We want to run this analysis for you. And the way that we can run this analysis for you is by you going to ssa.gov, which is Social Security's website, and you will create a login if you haven't already. Once you are logged in the top center part of the page, there'll be an opportunity for you to download a PDF. And when you download that PDF, it looks exactly like this. This is a sample that Social Security provided to us. And then once you have that statement, please email it to us at info@deckmanwealth.com, and we will set up a time to meet to go over all of the different scenarios with you. Social Security is way too important to leave for guesswork. Please allow us to help maximize your income in your retirement. So now I'll turn it back over to Jordan and we'll see if we have any questions.
Yeah, thank you, Sam. Looks like we already have several questions. Just as a reminder, please email us any questions you have at info@deckmanwealth.com, and we're more than happy to answer that. I also want to point out this free Social Security analysis that Sam referred to is something that we're able to prepare where you don't have to physically come into the office. We can do this over Zoom or over the phone, and we're happy to help in any way that's best for you. All right, well, let's start with our first question. I've heard that there are rumors or innuendos that Social Security is going to be cut and there's going to be changes. I'll take that question, Sam. Quite frankly, there's a lot of information and, more frankly, a lot of misinformation. At least to our knowledge, there is no proposal being discussed at all in reducing Social Security benefits, period. There has been a mention of addressing fraud and abuse, but absolutely no benefit change to your Social Security benefit at any point. Okay, so there's another question here. I've heard another proposal regarding taxes on Social Security. I'll take that one again. So Sam already highlighted how Social Security is currently taxed, and it's income driven based on your total income. And there is a current proposal before Congress to do away with, in other words, there won't be any taxes, assuming the tax bill passes. So we'll see what happens, but that could be a very big benefit for anyone collecting Social Security going forward. Sam, I think we have another question. You want to take that one?
Yes. Okay, I'm going to summarize it. Essentially, it's can you explain the survivor benefit one more time? So, while you and your spouse are both living, you are both entitled to a benefit. You get the greater of the benefit based on your own working record, or you can get half of the spouse's if it's bigger. Now, you only get half of the spouse's if you wait to file for your own benefit at age 67. And again, when one of you passes away, one of the benefits goes away. So while you're both living, there's two benefits. When there's only one person living, there's one benefit.
Okay. All right. Any other questions? I don't think we have any other questions at this moment. What I'd like to say is thank you. We greatly appreciate your time and joining us today. Please call us, email us, reach out to us. We are more than happy to help you regarding Social Security or any other questions related. Thank you again. Have a wonderful day.
Thank you.
Bye bye.